Welcome to another episode of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, licensed real estate broker and realtor right here in Santa Clara County, California, ready to help you with all of your real estate needs, and also the Rebel Broker. Now this week, folks, I wanted to talk a little bit about rentals, what rental rates are doing. Now there's a couple of reasons for this. One is the national headlines are, particularly this week and this month, discussing declines in average rent, and I wanted to give it the context of what we're seeing here locally in Santa Clara County. So if you're someone who is a renter right now, or if you are someone who's considering the option of becoming a landlord, and that's becoming far more common these days, as we find homeowners who want to relocate, but who don't want to sell their home because they have such an amazing interest rate on their mortgage. I've talked to people who have 2-point-something%, 3-point-something%, and they feel like that is such a great value proposition that the idea of letting that loan just go doesn't make a lot of sense for them. So what I'm offering a lot of potential sellers, people who are thinking about selling their home, is just presenting the option of renting your home out and moving on to your next home and getting financing on that side, particularly if the place you're moving to has home costs that are significantly lower than here. And since so many folks are looking to move out of state, that tends to be the case. So it's turning out to be a viable option. So I thought it'd be good on this week's podcast to cover some of the numbers for the main communities that sort of define the market here in Santa Clara County. So what I'm going to do is cut it up into 3 different chunks. One is going to be San Jose, one's going to be Morgan Hill, and the next is going to be Gilroy. San Jose is the largest market in Santa Clara County. It's the largest geographical area. It has the highest population. It has the highest number of transactions. So it made sense to focus on that. And then I wanted to also then go with my super local market of Morgan Hill and then sort of Gilroy, because then that gives you views of right in the heart of Santa Clara County and then slowly moving a little further out in terms of understanding the dynamic between that increased commute for folks who have to perhaps drive a little further to get to their job that might be in San Jose or Sunnyvale or Cupertino or wherever it might be, and then what the rents are in those areas. And there's some very surprising data here. So I'm going to go ahead and jump into it. For those of you who are listening to the podcast via iTunes or any of the other ways it gets presented, whether it's iHeartRadio or Spotify or any of the other ways, thank you very much for being a subscriber to the podcast. There will be visuals on the YouTube video version of today's podcast, but I am going to discuss all of these numbers so you won't be left in the dark in terms of what we're looking at. So let's go ahead and start our exploration of what current rental rates are by looking at San Jose. Now, today I'm going to go ahead and use Zillow as our data source. And the reason why I'm doing that is Zillow and Trulia are the same. They're owned by the same company and they share a same data back end. And the vast majority of rentals out there are being promoted, rented through Zillow. So they tend to have some pretty good data here. Now, one thing that's interesting is that when you get that big 10,000 foot view and you look down over San Jose, you see what indicates the same thing that headlines are pointing out, where the month over month charge in rents is down $16 year over year. It says it's down $222, with the median rent being $3,250 and the available rentals being 1,290 total units. But the devil's in the details when it comes to San Jose, because this is not reflective of what you're seeing at different unit sizes. So let's go ahead and look into this. This is for all types. And we're going to start just by looking at what a studio is going for. You can see studios have seen a drop, and studios tend to be the least desirable rentals. It's down $77 month over month, and it's down $246 year over year, excuse me. But still the median rent is $2,000 a month for a studio. Now, I have 3 sons that are currently out there. One of them is actually looking for a new place to live. So he's looking for studios and is finding this to be the case, where the ones he's finding in areas he'd like to live are in that $2,000 range, with options being as low as, say, $1,700 or $1,800 if you're willing to go to certain areas that maybe don't offer some amenities like a garage or those types of things. But when we pull out and start looking at the next size up, we see that the one bedrooms, the rent jumps up to $2,385, with the month-to-month change being down $15, the year-over-year change being down $115. And again, one bedrooms Still in that same bracket of not super desirable in terms of what folks are looking for. Just like when you're shopping for a home, the most desirable homes tend to be those 3-bed, 2-bath homes for rent. Now, as soon as we go to 2 bedrooms, we start to see things change. Where the month-to-month rent is $31 higher, the median rent is $3,100, and the year-over-year change is plus $100. Now, if you are someone who is considering getting into real estate investing, that is why I always suggest, particularly in our local market, that you don't get studios. You get 2-bedroom units minimum to start off. If you're doing duplexes, duplex studios, in my opinion, just aren't great. They tend to be more volatile. You have to have a really, really in-demand market for those studios to be more desirable. And even then, people always consider those studios, regardless of the market, as transitory. And not just transitory in the usual way that a rental property is transitory, but in a I want to get out of here as fast as I can kind of way. And typically, because of the way life works, eventually, that studio just isn't going to work. That one person tends to become 2 people at some point, and then they always want to move up to the next size higher. So I always suggest that as you are an investor and you're filtering through listings that are available for sale, or you're out there soliciting folks for a home that you're interested in buying as an investment, I always suggest starting with at least a 2-bedroom home. Now, let's go ahead and jump from here. Now, notice there's also 387 homes in all of San Jose. There's only 387 homes that are 2-bedroom units currently available for $3,100 on average. Once we go to 3 bedrooms, we see month to month is down $5, but the year-over-year change is up $180, and there's 296 units currently available. But check out that median rent for a 3-bedroom, $4,095. Now, this is pretty reasonable math for you, and for you as someone who might be an investor, that's what it should all come down to, whatever the math is. So using these numbers as a correlation to your investment is super important. But while this is good to get a feeling for all of San Jose, for those of you who've looked at San Jose, you know San Jose is chock full of micro markets with varying desirability. So you can use Zillow and Trulia as a great tool. I've actually done past podcasts and past videos on YouTube walking you through that process where you can use these, find rentals you're interested in where the numbers seem to pencil out, then go to a site like Zillow or Trulia and see what homes are renting for with about the same square footage, the same beds and baths. See what those homes are currently up on the market for and see how long they've been on Zillow to get an idea of how lucrative those numbers are, because that'll calibrate you more closely to what you want to ask for in terms of rent if you want to rent quickly. And typically in my head, what I'm thinking when I look at these properties that are comparable as rentals, I will usually take whatever their rent is and I'll subtract $100 because I would want to go in there and get a good tenant quickly to start generating some income on that property. So for budgeting purposes, use that. That doesn't necessarily mean you need to then list it at that $100 below what the other person was renting for, but it's a way to give yourself a little bit of a buffer that I think is helpful. And of course, as I said, micro markets are all over the place in San Jose. There's tons of them. San Jose stretches such a far distance that being aware of that micro market and where that property is specifically located is going to be a key one for you. Now, if we then move on and take a look at 4+ bedrooms, we can see that it's up in all dimensions. And check out what that median rent is, $5,688 a month. Month over month change plus $151. Year over year change plus 710 with 183 available units. This is completely bucking the national trend where we're seeing rents on average across various home sizes going down. Now, remember, this is all home types. If we take a look just at houses, the median rent there is $5,700 with an increase from month to month of 151 and a year over year increase of 703 with 24 average days on market before it gets rented. If we take a look just at apartments and condos, only about $300 less, $5,345, but the month over month change, check that out, $3,095, year over year change, $3,420. And there's only 7. So I would take these numbers in terms of month over month and year over year change with a grain of salt. But in terms of the available units, to think that in all of San Jose, there are only 7 that are 4 beds or more, it's kind of a shocker, but is a reflection of very low inventory that might feed these higher rents. Why someone would be willing to pay that amount when they could pay less for a home? Because as we can see, It's 57 for a home. It's 53. So you'd be saving about $300. I'm just not sure that ends up being worth it. It might be worth just paying that extra money. And then in terms of townhomes, no month-to-month change, 4,450 and $51 increase year over year with an average days on market of 20, and there's 18 available. And so this looks like a good deal, right? So, and this is something to take into account when you're someone who's planning out your strategies for getting an investment property. And what's really great about tools like this is as you're shopping for that first investment property and you know the areas you're most interested in, just check these numbers on a month-to-month basis. Get a feeling for which types of home are on the market the shortest, right? Because you want to get rented quickly. What are the median rents? How much increase has there been? And you can see there's also a chart here that gives you an idea of what prices have been doing, gives you sort of an overall market temperature. And you can also compare these to other areas or zip codes. So this becomes a great tool for someone who's planning. Now, if we take a look at 3-bed homes, townhomes is only up $50 year over year, down $254 month over month, with 59 homes currently available, 19 days on the market. So in terms of how quickly they're ending up getting rented, these are happening the fastest, with a monthly rent of $3,850. If we look at apartments and condos, up 178 year over year. There's 78 currently available with $54 drop month over month, $3,759 for the median rent. And again, if we look at houses, plus 50 from last month, plus 200 from last year, 20 days average on the market, $4,200 is the median rent. And there's 159 currently available. So still very expensive just from a basic cost standpoint. And these are all great numbers to plug in when you're trying to calculate whether or not it'll be positive cash flow for you if you're looking into getting an investment property. And remember, you can do this for any area. There's a link here actually at Zillow for you to choose another area. Doesn't have to be here in California. Could be anywhere in the country where you could take advantage of these numbers. Now, just to get a little bit more calibrated to our local market, let's go ahead and take a look at Morgan Hill. Morgan Hill is nuts. And I think this is a trend we have seen sort of across the board as you move out of the heart of Silicon Valley, the heart of Santa Clara County, where attention has been directed this way simply because folks want to avoid those higher costs to the north or in any direction, depending on whether or not you go north or south or east or west. You can't go too far west without hitting the water. But across the board, we're seeing dramatic increases in Morgan Hill in the rental market. Month to month, we saw an increase of $305 for all beds overall, all home types, with a $701 increase from the same time last year. And there's currently 50 available rentals, with the median rent being $3,800 across the board. Now, if we start to focus in a little bit and take a look at what studios are doing, insane performance. There's currently only one available, so there's obviously a very low sample size here, but $1,200 increase month over month, $3,000 increase year over year, with a median rent, obviously, of $3,000. Since there's only one property, that's the number we're going to get. So, this isn't something, because of the small sample size and because of the nature of one bedrooms, I wouldn't let this be something that you hang all your investment strategies on, because part of understanding this data is also understanding the limits of the data. So make sure this is something that you're super familiar with. And you can see that we've also had some pretty volatile changes just in the last month, right? Look at that dramatic increase. So, and it would be interesting to see what's up with this property, this particular one property, because that is such a deviation just from month to month that it's worth being a little skeptical of. So just keep that in mind. It's another strategy that you should have in your back pocket as you're analyzing your options as a potential investor in properties. If we take a look at the one bedrooms, we can see it's down 145 month over month, up 642 year over year, with 4 currently available, with the median rent being $2,742. Again, I still think two bedrooms are where you want to start, but this is fairly decent performance for one bedrooms in Morgan Hill. And you can see we've actually had a decline over the last couple of months for Morgan Hill in terms of the performance of rents in the one bedrooms. But again, remember, sample size is super small, so you'd want to get in and get a little bit more detail here. Once we move up to 2 bedrooms, we can see there's a little bit more of an increase. There's 12 rentals right now, zero amount of change month to month, 0 change year over year. So it's steady from the same time last year. But notice that we did see an uptick from May to June, which is interesting, and it currently stands at $2,950 for a 2-bed. But that would be something we'd want to take a closer look at. Again, 3 bedrooms are the most desirable. 2 are and above that is better, but then your acquisition cost is obviously going to be more for more than a 3-bedroom. But 2 bedrooms, when you're purchasing, you're going to find that 2 bedrooms and 1 bedrooms and studios are the least desirable in the purchase market as well. And you have a lot more room to work with in terms of negotiating the best price for you to make that investment work for you as well as possible. Once we go up to 3 bedrooms, we can see that the numbers again go back into increasing month over month, $150 increase, year to year, $275 increase, 18 rentals currently available that fit this requirement in Morgan Hill with a median rent of $3,875. Now check out this one. This one's nuts. So 4-bedroom plus, year over year change, $3,228. With 15 currently available, month over month change, $2,875. And what's interesting is notice there isn't a huge amount of volatility here. If we look at where these numbers are, you see some weird changes in 2022, right? This light blue number is 2022, and you see months where it really jumps. And again, because of the smaller sample size, you can see where maybe 1 home rented for this amount, right? So you'd want to kind of normalize this in your mind. And this obviously happened last month as well. But this is really where you'd be. $5,225 a month is the median rent for 4+ bedroom houses. I tend to spend an awful lot of time focusing on this because I have a property that fits into this bill. And $5,000 is currently the going rate. If you've got a 4 or 5 bedroom home with about 3,000 square feet, that's really what they're going for. And it's just getting worse and worse as we have folks who acquired homes more recently and are paying higher interest rates. And it's one of those things where the price that's going to be charged, is going to be asked for by investors, by landlords, is going to be commensurate with what their expenses are. Now, of course, it's all up to the market, what are renters willing to pay. So not always those two are going to meet. And as the inventory grows and renters have more choices, sellers or renters or landlords are going to have to bring those prices down in order to attract tenants at all. So it's a tough thing. I've had some folks who've jumped into in the investing and simply just throw the number up there that covers their expenses plus some amount, and have found that just does not work. We've got a market that is perhaps not as growing in some areas as quickly as others, but in terms of what we're seeing with 3 bedrooms and 4 bedrooms, the Morgan Hill market is really kind of robust. Now let's take a look now at Gilroy, because I think we've got some pretty interesting things going on in Gilroy with the median rent, all properties, all types, all bedroom configurations. $3,250 is the median rent. Month over month change, $375 up. Year over year change, $250 down. But we've got quite a few with 79 currently available. If we take a look at studios, this one completely bucks the trend. So this is a market where maybe you make studios work more, but I think you are still going to get more turnover in a studio than you are going to get in the other classes of property in terms of bedroom size. Month over month increase of $55. Year over year change $1,450. There's currently 2 available rentals at this price point. So as long as these folks are pricing below those 2 bedroom homes, they're going to get more attention. And again, the median rent is $1,450. The 2 bedrooms, also an increase, $50 higher month over month, $205 year over year for $2,100 being the median in Gilroy with 9 homes currently on the market. 2 bedrooms, down $35 month over month, up $145 year over year with a $2,540 median price tag with 27 currently available. And given that number, it wouldn't surprise me if we start to see some landlords decide they're going to bring that down a little bit to attract renters. 3 bedroom plus 100 across the board here over year and over the last month, with median rent being $3,800 with 15 units available. And 4 bedrooms down $875 month over month, which I think could potentially be explained by some more luxury end homes that rented last month, but 375 year over year increase for a $4,600 average rent with 26 available rentals. So given this, what's interesting is the dynamic has switched a little bit, right? In terms of desirability and the amount of increase that you could expect to get, Morgan Hill is leaning more into those 3-bedroom, 4-bedroom homes. Gilroy, on the other hand, is not. You're seeing 1 and 2-bedroom homes representing potentially greater opportunities. And that's good because those tend to cost less when purchasing. So I wanted to point all that out. The dynamics here are very different from our national numbers. And I wanted to show you what our local markets are seeing, because each of these spells a slightly different flavor of opportunity when looked at the city overall. Now, as I said before, micro markets are the key, so you're going to need to know what's going on in those local markets. But of course, that's easy to do in something like this where you are, if you're just interested in Northwest Gilroy, for instance, just use this, go to the map for this area and zoom into that area. Let's see. In fact, that's even something we can do here. We can explore the rentals for Gilroy. And there we go. It makes it super easy. And we can see we're not getting a whole lot of rentals over here in the Northwest. Most of them are more central. But these are all apartments and condos. If we go houses and townhomes, now houses are much more prevalent in this part. Here we go. Then you can see what's going on. And you can see how the rental rates sort of distribute themselves, where we can see there's a high 4s up to 5 for these 4-bedroom, 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 5-bedroom, 3-bedroom. And then, of course, we can see that the numbers tend to drop a little bit here in the south and east ends of town, and we still get relatively high numbers, but maybe a little bit more competitive over here on the northeast end of town. And the extreme northeast, for instance, over here, right, which is more estates, more large homes. We don't tend to see those homes come on the market too frequently. But I wanted to give you this rundown because this is a great tool for you, whether you're someone who just wants to get familiar with the markets, or you are actively looking for that first investment property, or you are someone who needs to rent for now. Maybe you're trying to get your expenses down to save up money so you can become a real estate investor or owner. This is a great tool for you to use. So I wanted to cover it, give everyone sort of an overview of what the current markets say in contrast to what some of the national headlines are saying, but then also introduce you to this as a tool and also the ideas of some critical thinking as it relates to the data that you are ingesting. Because while San Jose gives us numbers that I think are pretty good to strategize on, I think that the smaller communities, which are frequently the places you're going to get the best bang for the buck and you're going to get the best return on investment, are a little bit more difficult because the sample size is so small. And you want to put on your thinking cap, be a little bit more data critical, and try to understand what story is actually being told by the data, rather than in the case I think we had in Morgan Hill or Gilroy. We actually had one class where there was only one property on the market. Well, you can't base an estimation of a market based on one property, right? Now, that does tell you that it's a super underrepresented area, right? If there's only one property of a specific type represented, it shows that the supply is super low. So that's a very timely place for you to potentially invest, but that's no guarantee that's always going to be true. So just things to keep in mind as you're evaluating the market. Now, of course, the goal is always to leave you with more knowledge on the table than I take up with your time. I would absolutely hope that we've accomplished that today. Feel free to reach out to me with any questions. If you have some questions and you're listening to the podcast, you can head on over to soldbyrobert.com or therebelbroker.com. Find today's show and ask a question right there, or contact me directly through the website. If you're watching on YouTube, feel free to add a comment below and ask me any questions or make any comments that you think are relevant. I'd love to discuss those things in a forum where all of the folks who are viewing the content get an opportunity to review your question. Thanks again for listening, everybody. I'll talk to y'all next time.